All right. Welcome back to the I Love Annuities podcast. I am Jeremiah Conger.
And I am Zachary Van Ness, and we are the Annuity Dudes.
Today, we are tackling a huge topic, how to pick the right annuity company. You know, Zach, we've talked about how to pick the right annuity. We've talked about the annuity checklist, and I think it's a right fit here to put this episode in place. And that's about, really identifying the right annuity company. So, whether you're buying your first annuity or maybe thinking about switching carriers, this is definitely a must listen episode.
Yeah, so today we're just going to dive in deeper and taking a look at these carriers and their financial strengths, the ratings, who gives these ratings, and really how to understand them and how to do your own research in determining the right carrier, the right annuity carrier for you. And just using the NAIC website. We've talked about this before. I know we've presented this in some meetings in the past, and maybe helping you to use this on your own time as well.
Yeah, that's right. I mean, choosing the right annuity provider, I think is really critical to making a sound decision. Getting the right benefits and features in the annuity is really important as well. But having the backing of that annuity provider that offers those features and benefits is even more critical. So, it comes down to the rule of thumb here, and that's an annuity is only as good as the company that backs it. That's the rule of thumb in this business. When we talk about the contractual guarantees, the guarantees are backed by the insurance company or the annuity provider. And those guarantees are only as good as the claims paying ability of the annuity provider. So the carrier's financial strength determines whether your payments will keep coming decades down the road, especially if you have a lifetime income guarantee. But as just as equally as important on the growth side, if you're looking at an indexed annuity or a fixed rate annuity of some sort, those rates and those benefits are only as good as the claims paying ability of that issuing insurance company.
Yeah, and these annuities most oftentimes are longer term contracts, right? So whether that's 5 years, 10 years, in some cases, even up to 15 years, you need a company that's really strong enough to last for that longer period of time. And especially if we're talking about something that's going to provide a lifetime of income, we're looking at something that would last even longer than that 10-year period. It's not just about the product. Also, ultimately, it's about the company's ability to fulfill its guarantees and promises. And really, in part, in looking at that, what we're trying to do is we're trying to understand these carrier ratings and can they pay us out for the remaining 30 years that we have of our lives or the remainder of that policy. And there are four major rating agencies that we take a look at. Jeremiah, if you want to take a look at that, we look at AM Best, S&P, Moody's, and Fitch as our core that we look at.
That's right. And the one that's most commonly or widely used in our industry would be AM Best if I had to choose one. So I'll go ahead and share my screen here and show the AM Best rating scale or ratings guide. And you can look, if you're watching this episode on our YouTube channel, you can see our screen share live right there. And we'll look at the specific rating guide that's offered through AM Best. So I'll read the quick disclaimer here at the top just to kind of set the tone here, and then you can follow along. So AM Best financial strength rating is an independent opinion of an insurer's financial strength and ability to meet its ongoing insurance policy and contract obligations. An FSR is not assigned to specific insurance policies or contracts and does not address any other risk, including but not limited to an insurer's claims payment policies or procedures. The ability of the insurer to dispute or deny claims payment on grounds of misrepresentation or fraud, or any specific liability contractually borne by the policy or contract holder. An FSR is not a recommendation to purchase, hold, or terminate any insurance policy, contract, or any other financial obligation issued by an insurer, nor does it address the suitability of any particular policy or contract for a specific purpose or purchaser. In addition, an FSR may be displayed with a rating identifier, modifier, or an affiliation code that denotes a unique aspect of the opinion. So I'm glad we got that fun, boring stuff out of the way. But you'll see that their rating scale here starts at the top with the superior rating category. And those rating symbols would be A plus, and then they also give a notch. If you're superior in that category as well, you can receive an additional notch or a plus mark to signify that you are the best of the best. So the scale starts at A plus plus being at the top, and then all the way down to a D, which would represent a poor rating. So AM Best is widely known to be the most popular used rating agency, but they're all going to be relatively similar. You know, there are sometimes people that have a preference, but AM Best is known and specializing specifically in insurance. And again, the rating scale goes from A double plus to D as poor. And then S&P would be the next agency that is used. And we do use all four of the most popular agencies. And we also use a couple that are not as widely known, but a little bit more analytical when it comes to the financial balance sheets of these insurance companies. There's a little bit more transparency there. One that we're a fan of would be Weiss, WEISS, the Weiss rating scale. Their way of analyzing the data, the financial data of each of these annuity providers, I think, is a little different in the way that they address it, but very, very detail oriented regarding the most important part, and that is their financial balance sheet.
Yeah, and really just looking at that stability becomes a big factor. And I will say, I know oftentimes we'll find some carriers that do might tout an A rating with just one of these carriers. How do you typically address that if we see only one rating?
Well, you mean if it's only showing like registered on one agency?
Right. Yeah. Yeah.
Well, I mean, sometimes that's going to be kind of indicative that the insurance company isn't as strongly rated. Also, it could mean that they're fairly new. But the way that I would address it is I kind of start to look a little deeper than that and use some of our tools and resources if they're available for that specific company and situation, just to see if we can dig deeper to find more information. I believe that while a rating is important, it's not the end all be all way to determine, whether or not that annuity provider is a company that you should consider with your hard earned money. It's a good starting point, but I do believe that, looking specifically at the balance sheets of these organizations, and we'll show you how to do that here once we get into the NAIC website. But looking at the balance sheets, looking at the health of the overall portfolio composition, we use a tool there for that. And then also looking at the complaint counts and things to that degree. Also looking at the company's tenure, how long they've been around. But you definitely want to, with an annuity being a long-term vehicle, it's a long-term commitment. You definitely want to make sure that the insurance company that's backing that contract, that they have a good tenure, that they have a proven track record of excellence, regarding their financials, regarding their customer experience, regarding their advisor support. I think that's also important. There's nothing worse than like calling an annuity provider to get something done for a client and having a hold time of like 25 to 35 minutes. Like that's just ridiculous. So it is important also with your advisor that whoever you choose to work with, that, they've got experience in this industry and they have relationships in this industry. And fortunately for us as annuity association, we're really blessed to have the amount of volume and the premium that we produce each year. And we have relationships now with not only the carriers, but we also have specific relationships within our back office team through our IMO relationships. So when it comes to getting something done, we definitely have the ability and leverage, if you will, to, get something done in a very timely and efficient manner.
Yeah. Yeah, without a doubt. So if somebody's walking into, looking at carriers on their own, AM Best might be the introduction into taking a look at a carrier rating. And I know, like you had mentioned, we try to check all four of those, and taking a look at S&P and Moody's. Um, and we can do that with the software that we've got if we happen to have a rating from those other providers.
Yeah, I'll pull that up real quick, the software.
Yeah.
If I can figure out how to do it.
You got it, man.
It's been a little
Yeah.
while.
Speaking to what you had mentioned about what we can offer from our side of it, I think it's a big value add and knowing that you've got a team behind you. So obviously it's important that we get the right annuity carrier and the right product, but ultimately knowing that you've got a team behind you at Annuity Association to hold your hand through this process is a big component that we hold a lot of weight on, and we take a lot of pride in our ability to service our clients.
So here's an example. If you can see my screen share here now, Zach.
Yeah. Yep.
I just pulled up the first product that came up. It was one from Athene Annuity and Life Company. And you'll see the software here indicates the year that the insurer was founded, which in this case is 1909. And then we'll see the four rating agencies here: AM Best, Fitch, Moody's, and S&P. And then also one of the other areas that we also analyze is called the Comdex score, which is basically an average across those four agencies. And the higher the number on a scale of 0 to 100, the better that score is.
Yeah, so this would be something that we would have access to. We'd be able to share as part of our meeting process. And some of it might be something that you can research on your own outside of what we can share as well.
Also, if you do request a free annuity report through annuityassociation.com, on that report, it will have those ratings as well.
Awesome.
So yeah, you definitely want to make sure that you're evaluating and taking a deeper dive into that overall financial stability rating, because at the end of the day, that's what it is, the financial stability of that issuing insurance company. It's very rare that here at Annuity Association that we would ever suggest that you should go with a lesser rated company. It doesn't mean that a lesser rated company doesn't mean that they're necessarily bad, but the lower the rating, it is an indicator that they could be a smaller company. They could have maybe a little bit more risk involved in their overall financial portfolio that they're investing in. So you definitely want to be aware of that. And that's where we take a deeper dive. And we do have additional tools to take those deeper dives into those things. But when you're kind of looking at these companies and you're kind of considering the ratings as a determining factor or one of the determining factors, I think it's important to only really consider a lesser or lower rated company if you can get more value out of it, like and really have an argument with yourself on why you should consider that lesser rating for that additional perceived value. So if it's an income play, you might say, well, look, this company might give us $300 or $400 more a month, but they're a B plus plus, and the next best company is $300 or $400 less in income, but they're an A plus. That's the conversation that you really need to have between you and your advisor and your spouse, if you have one, to really gauge whether or not that compromise for a lesser rated company is worth those additional $300 or $400 a month. Sometimes it is, but you really need to know what to look for. And that's really the purpose of this episode, is to help you take a deeper dive on analyzing a B double plus rated company maybe versus an A plus, and see if that compromise and the lesser rating is worth the squeeze of that lemon, the $300 or $400 a month.
Yeah. And really looking at annuities, we're trying to mitigate risk to begin with. And that's why we're going the route of an annuity. So it's mitigating that risk and then taking a deeper dive into understanding, is this the best avenue for you to take, and some sacrifice of income or some sacrifice of a lower rating from that carrier.
For sure. For sure. That's a good point. Yeah. So most widely used and trusted ratings, like we talked about with AM Best, that's really the one most commonly used across our industry. But what's interesting to note is that sometimes you'll see that on AM Best, an insurance company might have, a higher rating, but then maybe on S&P or Moody's, that rating could be a little less. And I've always found that to be interesting, but it really comes down to understanding the methodologies behind those different agencies. But to really simplify that equation, if you're really trying to compare and consider the ratings from each of those four agencies, that would be really where the Comdex score comes into play. And the Comdex score, again, is going to be pretty much an average of those four um, agencies. And then basically taking a Comdex into consideration, you're kind of considering all four agencies and picking a healthy company across all four that meets your needs.
Yeah, it's a great point. From our end of it, we're going to take a look at those ratings with you, take a look at Comdex, anything that we can assess from the rating scale. But as you had mentioned before, one key component that we'll take a look at is making that deeper dive into NAIC, taking a look at financial overviews of these carriers as well.
Absolutely. So let's go ahead and take a look at that, and we'll get that pulled up. So for those of you that are new, we have covered this topic briefly on a couple episodes past. And the NAIC is the National Association of Insurance Commissioners website, and is a consumer-facing website for you to gather your information um, on the particular annuity companies that you might be considering. They also take a look at all things insurance. So whether it be auto or home, they're going to look at all the companies that offer those types of insurances. So you can not only use this for your annuities, but you can also use this for things like homeowners insurance, auto, commercial, things like that. Even
Yeah.
aircraft insurance, which is kind of crazy. Health and life, that would be another one. So we're going to come up. I'm going to share my screen here. I'm going to show you exactly how to use this tool. Let me share this. Boom, boom. Window.
You're going to show from the main page?
Yeah.
Yeah, cool.
Let me know when you can see it here. Where is it? Here we go.
Yeah, you're good.
Okay. So where you would go is I just get here by going to NAIC.org. And then once you're on the consumer insurance search results screen, it's going to look just like this. And then that's where you can type in the specific company. We're going to pick on Nationwide today, which is one of the more popular annuity providers here in the US. And they do all things insurance. They also do financial investments as well. Good company, very customer centric, which we appreciate. And they treat our team here at Annuity Association pretty well as well. So we're very thankful for that. So you'll notice that it shows a lot of different options when Nationwide populates. And what you want to do is look down the column of insurance types here, and you want to find the one that's going to be specific to annuities. So it's going to be this one here, the Annuity Health and Life version. So Nationwide Life and Annuity Insurance Company. And then to the far right, you're going to click that hyperlink that says click for report options. And then here, you're going to notice a few different hyperlinks to click on as well. We're going to go right to the Go to Financial Overview report. And so here, the annuity and life arm of Nationwide was established.
You'll have to share that screen. It's not popping up here.
Okay, here you go. Can
There
you see
you
it
go.
now?
Yep.
The commencement date's May 6th of 1981. And then here we can see their assets and liabilities and their capital and surplus. So at the time of this recording, in terms of total assets, they're right at just over 57 billion with a B. And then liabilities is just under 54 billion with a B, putting their capital surplus right around 3.5 billion, which is good. If we scroll down, the other thing that I appreciate about this website is that you can look at the 3-year net incomes of that branch of Nationwide. In this case, it's the annuity branch. And we'll notice their 3-year net incomes, actually two of the past years in the red, which it happens sometimes depending on the claims and things that go out. So understand that these companies also do life insurance. So that's one important thing that you have to consider. Not all annuity providers do life insurance, but it is common that most annuity providers also do life insurance. And when they do, that's all grouped into one book, financial book. So in regards to their net incomes, 2 of the last 3 years being in the red, the only thing I could attribute that to would be, towards the claims, death claims and things like that. In addition, going down the page, you'll see the complaint count. So we're literally in the single-digit complaint count numbers here. 2024, there were 8 complaints filed. 23, there were 7, and then 2022, there were 9. So in my opinion, given that there's thousands and thousands of policyholders at Nationwide, and we're under 10 complaints in the last 3 years for each of those years individually, it's pretty good. Anything I'm missing here, Zach?
No, I think you covered that well.
Cool.
Yeah.
All right. So when you look at other tools that you can use, if you're working with an annuity advisor and you really want to take deeper dives into these things like the financial overviews, the NAIC is a great tool. That's something you can do at home. You don't need to go in it. You don't need to go to an advisor to do that. But if you really want to get into the nitty-gritty details, that is where you would want to work with somebody, or at least ensure that they have the tools to be able to do that. One of the tools that we use here at Annuity Association is a company that provides what we call vital signs. And the vital signs is an additional deeper dive into the financial overviews of these associated annuity providers. And it'll take a deeper look at the specifics to the composition of their overall investment portfolio. It'll also take a look at, in regards to that composition of that portfolio, what the percentage is of underperforming assets are. It'll also cover like their average yield on their book, on their investment book, and things like that. So when you're working with an annuity advisor or an agent and you want to take a deeper dive, this is one of the tools that we use. And this is one of the tools that you'll want to make sure that they're using in order to give you that information that you're looking for. I have another screen share here for you, Zach, if I may. Let's see here. We'll pull up at Nationwide's vital signs real fast.
All right, you're good.
Okay. So this is an example of Nationwide's vital signs. It's a snapshot taking a deeper dive into the specific portfolio composition and the aforementioned items. They also include Weiss ratings on here, which is really cool too, that a lot of the other information we've looked at so far did not include. We're a big fan of Weiss. They're more of a safety rating focus in terms of financial safety. And their score is a little bit different. So you might see that, company might have like a C score over at Weiss. That doesn't mean it's bad. I noticed that Weiss is really more stringent on the way that they give out the rankings, or the ratings rather. So it's like that old math teacher that you had, that no matter how good you tried, you still got a average score. At least that was the way it was for me.
You got to
Weiss
show your work.
Yeah, exactly. All my papers had the red ink all over them. I definitely didn't do a good job showing my work. But here's an example. So on the left, you have the pie chart here. So total invested assets, just over 48 billion. And then the composition, it's widely known that annuity providers are big buyers of corporate bond blocks. So you'll see that in Nationwide's case, they have 72.4% of their investment holdings invested in bonds, less than 0.1 or right at 0.1% in stocks, 18.5% in mortgages. And then they have some cash and short-term equivalents and a few other things. It'll also to show you here the non-performing assets. So this is one of the ways that insurance companies get high ratings, is to have a sound investment portfolio. So having a small, I would really prefer zero, but having a limited amount of non-performing assets of the total investment portfolio is very important to getting that high rating. And you'll notice here that 0.1%, so less than 1 percentage point, 1 full percentage point is in or near default, and that happens to be with their bond portfolio. In regards to their bond quality, that's another thing that's measured. So you'll notice the bond quality here is broken up into different classes, class 1 being the highest, class 2 being the second highest, so on and so forth. And you'll notice between class 1 and 2, approximately 95%, just a tick over 95%, is invested in the 2 highest forms of bonds, highest quality. So if you're not using this tool, or your agent or advisor you're working with rather is not using this tool, and you want to work with an expert that can help you make a better annuity buying decision, this is just one of the many tools that we use to help our prospects get the information they need to make a good, sound, and more comfortable decision, one that they're confident in now and into the future.
Yeah, we've jokingly mentioned, and I've made that mention before, about a sleep at night annuity, and eliminating these red flags and making that decision is really what we're trying to do. Help ourselves sleep at night, make sure we made that right decision. We've talked about this before. I know I've mentioned it ad nauseum, but there should never be a time at which we're choosing an annuity and deciding to move forward with that one annuity after speaking with an advisor for an hour or 2 hours. I mean, we're talking, in often cases, thousands, if not hundreds of thousands of dollars, sometimes million.
Yeah.
This is a big part of the due process that we want to take and make sure that you can sleep at night with the decision that you made. And ultimately, there's a lot of weight on our shoulders as advisors to make sure that we're making the right recommendation. I've got to be able to sleep at night too. So eliminating these red flags, taking a look at, are there low ratings from these agencies? Are there any recent downgrades from the ratings? Are there any high complaints as we take a look at something like the NAIC website?
Yeah, those are all very important and really, really, ultimately red flags on maybe what you should be steering away from if any of those things come up. Now, I will tell you, because this is the day and age of technology, and we can really find anything we want to with a simple Google search, and find anything, literally anything we want, whether it be good or bad, or maybe even misinformation. If we type in a search query specific to what we're wanting to find, we're going to find something that's going to tie that all together and meet that search query's needs, if you will, because that's what Google's job is. And really where I'm going with this is that you have to be careful on just searching, things like Athene annuity reviews, right? Or even Nationwide's annuity reviews. You're going to find negative reviews. You're going to find negative reviews on every annuity provider that's out there. And there's a few reasons for that I'd like to address here real quick. The first is really understanding human psychology. The only time that we're ever inclined to leave a review is generally when we're pissed off, right? Or we're upset about what happened. And then when you kind of involve money, right? Your hard-earned money, it makes things a bit more sensitive in terms of what you're willing to tolerate. And you definitely feel like you should probably voice your frustrations through the form of a review. So that's the first thing. The second thing is these companies, these annuity providers, they do many different things other than annuities. So like Nationwide, for example, does auto, does home, does financial investing. They do annuities, they do life insurance, they do, I'm sure I'm missing a couple, but they do a lot of different things. They even do, sometimes they'll do like group retirement planning, um, which is usually one of the biggest challenges because there's so much involved with that. But with that being said, because they're so widely spread across the industries, it's only like realistic, right, for there to be just more opportunities for people to be upset for one reason or another. This could be something as simple as the customer service rep not answering a question correctly over the phone, or a check being delayed in the mail through the USPS, but it wasn't Nationwide's fault. Like there's all these different things out there that could make these companies receive more negative reviews. But I will tell you, if you go out there and look for it, you'll find it. And one of the questions that I always ask anybody that, prospect or whatever, if they say, well, I looked at this Nationwide annuity or whatever annuity it is, and I found all these negative reviews, the first question I ask them is, what car do you drive? What kind of car do you drive? And they'll say whatever brand it is. And then I'll say, do you like your car? Yeah, I love it. It's great. Okay, well, let me type in that model, Ford F-150 reviews, and I guarantee you I'm going to find negative reviews of that same exact vehicle that you have, that you cherish, that you love, that you recommend to your friends and family. And that's just because you have to understand that human nature is human nature, and there's no stopping that. It never will stop. People are going to leave more negative reviews than they do positive, and that's just the way it is. So don't get deterred by the reviews, because the other thing that we find is a lot of the reviews are generally associated with other branches of that company, not necessarily the annuity branch. So a situation comes to mind with Allianz, which is a big annuity provider, but they do also do a lot of retirement planning and a retirement, like company retirement management, group plans, and all of those things. And if you go in and look at Allianz reviews, like they're horrendous. But majority, there's even lawsuits out there for some of them on some of those sites. But those lawsuits are regarding like their group management side of the business, and it isn't tied to the annuities. They're separate, completely separate entities, and they're also managed separately. Like the Allianz has its own management over the annuity arm than they do like the group planning stuff. So if you go look for negative reviews, you're going to find them. I think the best way to vet these companies is working with an unbiased advisor that has no allegiance or relationships with just one company. They're going to truly help represent your best interest and show you exactly what to look for, show you how to rate these companies in multiple ways, show you how to dive deeper into the financials. And then that advisor should also have um, a track record of who they like to work with and why. And maybe it's even necessary for you to ask for referrals, or somebody that can provide a testimony to working with that advisor and their experience. And if you're interested in ours, you can go to our Better Business Bureau page. We're very proud of it. We're 5-star accredited there. And I don't know how many reviews we have now, but we have more than enough to show you that, we help people make better annuity buying decisions. We do that by first putting your interests first, and then helping you understand how to vet these companies, how to look at these products side by side, and make very thorough comparative analysis to make educated, informed, and comfortable, confident decisions.
Yeah. Man, that was a good way to wrap it.
Well, I stink at wrapping gifts at Christmas time, but when it comes to wrapping up a podcast, man, I'm an expert.
That's right. So ultimately, what we're really getting at here for today's episode is just do your homework, take your time. We've mentioned this before. There should be no rush in making a final decision. Do your due diligence, research these carriers. It's not just the product. It's not just the bottom line, the guaranteed income. we've got to rely on these carriers to do their part for us too.
Absolutely. Yep. And the reason that all of this, like our process and like the way that we're doing this and like what's driving this podcast episode and really just the podcast movement as a whole, it all stems from when I started in this business and trying to find the right way to analyze these products and these companies so that I could make a sound recommendation, one that I could sleep at night too, knowing that I was putting my client's best interest first. And man, that was a tough challenge because of just the antiquatedness of this industry. And so over time, it's all evolved to what this is today, and we're really proud of it. So we're passionate about annuities and the appropriate application of them in a sound retirement plan. Annuities aren't for everybody, but if you're looking for safety, if you're looking for confidence and clarity, if you're looking for peace of mind, and you're looking to really create an optimization on all those fronts, economically and psychonomically, then an annuity is right for you. And if you're wanting to go down that path of understanding and learning more about how to appropriately apply one to your plan, we would be honored to serve you and have that opportunity. You can do that by in the show notes or description, wherever you're watching this episode. There will be a link to schedule a time to speak with one of our senior annuity advisors like Zach here. Or if you're not ready to yet talk to somebody, but you want to start going down that path of education and understanding along with transparency, you can request a free annuity report, which will be tailored to your specific situation. And you can do that. There will be a separate link to request that report. Our team will curate that, tailor it towards your situation, and send that out within 24 to 48 hours. And we'd be honored to have the opportunity to help you there too. So, with that being said, I think that wraps up another episode. And anything else there, Zach?
No, that's it. Yeah, don't forget to hit that subscribe button. We've been gaining a lot of traction on YouTube, so thank you for subscribing. Thank you for watching and listening on any platform. We greatly appreciate it. Have a lot of really
Yeah,
good feedback.
absolutely. Yeah, very, very thankful, very fortunate to have the feedback so far. We really appreciate it. So if you've gotten some value, like, share, click the bell on YouTube, and we appreciate that from the bottom of our hearts. And again, Zachary Van Ness and Jeremiah Conjure with the Annuity Dudes, wrapping this one up.
See you.
Let's hit that music.